Welcome to Bloomberg Markets. I'm Shonali Bassick. It is noon here in New York, and traders are digesting the latest inflation data, plus keeping an eye on the Trump trade as the president-elect is in D.C. today on a massive day. Let's flip up the board, take a look at what the markets are doing. We are flying just under that 6,000 level that we hit earlier this week on the S&P 500. It is now up about 0.2%, gaining some steam after a weak start to the day. You're looking at the two-year yield at 4.27 on the day, a move of about 6 basis points, and the 10-year hanging out at 4.41. A lesser move there, but of course we've seen a move downward in the yield here after we saw that inflation data, at least initially. Bitcoin now at 92,000, flying higher by almost 5%. This is stunning because just a couple of hours we were still at 90,000. So that move has just been accelerating even throughout the day. Let's take a look here at some eye-popping movers on the equity side as well. Let's take a look at the shares of Rivian. They're surging. This comes after Volkswagen raised its investment plans in Rivian by $800 million. The move is signaling a commitment even as EV demand softens and the incoming Trump administration threatens to curtail supportive policies. Rivian's still up more than 16.9%. Rocket Lab also simply blasting off. The space launch company seeing its biggest intraday gain ever after providing a revenue forecast that beat estimates. It also signed a service agreement for multiple launches, and Rocket now up over 2 days now, 42.5%. Looking at Mara Holdings as well, seeing a surge since the U.S. election, down a bit today. Remember, this is a mining company by and large, down about 6%. Third quarter revenue missed expectations. The stock, though, is likely to be caught up in the crypto stock boom, so we'll keep an eye on it anyways. We're going to turn now, though, to the economy because we did have those CPI numbers out earlier today, as we were talking about, with U.S. inflation remaining firm in October. Earlier today, Bloomberg surveillance caught up with Minneapolis Fed President Neel Kashkari. He gave his take on what the fresh data means to the Fed.
I'm not seeing a lot of upside risk yet. We don't know what's going to get enacted. I'm not seeing a lot of upside risk that inflation is going to take off from here. The bigger risk that I'd be concerned about on the inflation front is just if we're landing at around the 2.5% level instead of back down to 2% level. I think that those risks existed before the election. And I think that there continues to be uncertainty now. And we need to just take our time, let the data come to us, and let that guide us.
And we're joined now by Bloomberg's Michael McKee, who conducted that interview with Kashkari. And it's fascinating. You see some confidence on the inflation front. The bond market, at least at the short end of the curve, when you look at the 2-year, is down quite meaningfully as well. What do you make of it all?
Well, you have to remember that Fed officials can't come out and say, we are worried about inflation, because then the markets are going to go crazy. I think what Kashkari is saying is we have seen this over the last couple of months, but it doesn't mean we don't think that we're going to go significantly higher. There's a bit of a seasonal aspect to it, and we also saw this happen at the first of the year, and the Fed kind of had to look beyond that. So they're saying we're not seeing anything at this point that's going to make us change our policy path. That doesn't mean they can't for December, because there's still another CPI report, PCE report, and the jobs report before that meeting.
You know, it's interesting when you're looking at the implied overnight rate on the WIRP function, you don't even drop below 360. Really. You don't drop below 368 over the next 2 years. And he did talk to you a little about that neutral rate, didn't he?
We asked about the neutral rate, and he said the neutral rate, well, this is the answer that they all give. We don't know what the neutral rate is, but we think it might have moved up. And that's what they're going to be trying to divine over the next couple of months, is where they would stop. Now, it depends on the overall progress on inflation. I wouldn't put a whole lot of stock in what the markets are saying right now about future policy path, because when Donald Trump comes to office, all that's going to change. So what you end up with is sort of all forecasts are valid until January 20th.
what about after that? You know, it's interesting. You're hearing more and more people talk about the push-pull between the policies. What do the people you talk to say? What do the top economists start to say? Because they have been so strongly warning that the tariff policies could be inflationary. And then you have others, even Jane Fraser, the CEO of Citigroup, saying that productivity can still be a boost to the economy. What are the tensions?
Well, Neil Kashkari talked about the productivity aspect of it. If productivity is rising at the rate it is now, that absorbs some of the inflationary pressure because they're getting more for the money that they're spending. The problem is going to be if tariffs come in on a broad basis, as the president is talking about, then the price level is going to go up. And then it becomes a matter of how consumers and businesses react. Do consumers say, inflation's higher again, so now I have to ask for an additional raise? The dollar will get stronger. Does that mean that businesses are going to be suffering in terms of currency translation? So the questions are yet to be answered.
Mike, we thank you so very much for your time. We want to move over now to Washington because not only is President-elect Donald Trump meeting at the White House with President Biden, let's take a quick listen first and then give you that update on what is happening over at the Senate. Take a listen.
Thank you very much. And politics is tough, and it's in many cases not a very nice world, but it is a nice world today, and I appreciate it very much. A transition that's so smooth, it'll be as smooth as it can get, and I very much appreciate that, Jill.
The president-elect also, of course, meeting with members of Congress, and multiple news reports now saying that John Thune is elected to be Senate Republican leader. We are going to bring in now Bloomberg Balance of Power anchor Kayleigh Lyons to join us live from the White House North Lawn in Washington. Bring us the drama.
Well, certainly there's no shortage of that in Washington today, Shanali. Bloomberg has not yet verified this, but according to both Fox News and Punchbowl News, Senator John Thune, the Republican from South Dakota, will be the next Republican leader in the Senate. That, of course, will be majority leader, as it will be a Senate in Republican control come January after the electoral victory we just witnessed last week. This, of course, in some ways isn't that surprising. Senator Thune has been the #2 Republican in the Senate for some time. He had a close relationship with the outgoing leader, Mitch McConnell, who he, of course, is now succeeding, though he was in a tight contest between himself and another John, Senator John Cornyn of Texas, and a third as well, Senator Rick Scott of Florida, who we understand, based on Punchbowl's reporting, was eliminated in the first round of secret balloting. Then it moved to the second round, in which reports say that Senator Thune won. This is, of course, despite the fact that Senator Scott was enjoying much support from those close to Donald Trump and many on the MAGA right that had endorsed him. Number of senators had said they would vote for him as well, including those who we understand have been floated for potential cabinet positions, like Senator Hagerty, for example, as well as Senator Rubio, who spoke on Rick Scott's behalf at the beginning of this process. But again, the secret ballot, the senators have decided that Senator John Thune will be the next majority leader.
Well, you mentioned the Rick Scott element of this and the closeness to the president-elect. What does this mean about the forces of power that are underpinning the Senate as they move into next year and move forward into decision-making?
Well, when we consider Senator Thune, he has had a bit of a rocky relationship with Donald Trump, Shanali. He has actually had to go down to Mar-a-Lago to try to make nice with him after they've had a bit of difficulty in their relationship in the years since President Trump left office the first time. All that said, it does seem that they have been able to patch things up to a certain degree. He may not be as close in terms of alignment with agenda as, say, Rick Scott may have been to this incoming administration, but clearly that is not what the senators have chosen here. He won the majority of these ballots, Senator Thune did. I would point out as well that because this is a secret ballot, the senators are not necessarily going to be held accountable for their votes. It's not going to be public who they voted for, and that makes it potentially a little bit easier to vote against what those close to Donald Trump had been advocating for, as you're not going to be on the record having cast that vote in the same way you see for House leadership, for example. And I would, on that point, Shanali, point out that House Republican leadership elections are happening today, too. It is likely that pretty much everyone is going to stay in place, as Donald Trump earlier at the Republican conference meeting, we understand, did endorse that Speaker Mike Johnson stay in that role.
You know, at the end of the day, this all comes down to policy, and policy that's not only dictated by cabinet members, but also in Congress. When it comes to the officials that the president-elect has been putting up for his cabinet positions, which now that we have more information about the composition of the Senate and even the House, will have the most difficulty when it comes to those confirmations?
That's difficult to say, Shonali. We've actually seen Donald Trump appointing people who don't need Senate confirmation when they are more controversial. We've seen that with for example, Stephen Miller being tapped as the deputy chief of staff for policy. That is someone who would probably struggle through a Senate confirmation if he was tapped for a post that required that. As for the cabinet level positions that will need to be confirmed, to this point, we haven't seen too much backlash for the picks, which include, we learned yesterday, for Department of Homeland Security Secretary Governor Kristi Noem. Potentially, there could be some difficulty just given the surprise over the pick of Pete Hegseth, the Fox host, who is a Army National Guard veteran as well, who has been tapped to lead the Department of Defense. But by and large, we haven't seen much formal, outspoken pushback to those who have been selected so far, knowing that this transition, while it is moving quickly, we've had a lot of names announced. We are still waiting on a number of names, including official appointments or selections for the Treasury Secretary role and the Secretary of State role. And we'll see if we get any light on that from Donald Trump as he emerges from the still ongoing meeting here at the White House with President Joe Biden.
Kayleigh, we thank you so much for your time. That is Bloomberg Balance of Power co-host Kayleigh Lines. Wanting to restate the latest news, Bloomberg can now also confirm that South Dakota Senator John Thune, who has been a longtime deputy of Mitch McConnell, also an advocate of free trade, has won the election to lead the Republican Senate majority next year. It will certainly be an interesting year. More markets up ahead. We'll bring you more news out of D.C. as we get it. This is Bloomberg. This is Bloomberg Markets, and I'm Shonali Bassick. New York City renters may no longer be on the hook for costly broker fees when signing a new lease. The City Council is poised to pass the FAIR Act, F-A-R-E, which requires landlords who hire real estate agents to pay the agents' fees themselves instead of passing them on to tenants. It has widespread support from affordable housing advocates, but those from the real estate industry argue that it wouldn't address a main reason why living in the city is so expensive. Joining us now with her insights, Bess Freedman, CEO of luxury real estate company Brown Harris Stevens. Also with us, Bloomberg's Abigail Doolittle, who has been all over the real estate beat for us here at Bloomberg Television. When you think about what is trying to be done here in New York City, do you think it'll fix the problem?
No, I don't think it will fix the problem. I think there's going to be unintended consequences for this legislation. And I think they're not thinking about the long term, because what's going to happen is that landlords are going to have to raise rents because of this. If they're going to pay brokers' fees, there's going to be a lack of transparency for consumers. And it's just going to be a lot of gridlock and problems. And so the long term is going to be higher rents. So I don't think this was well thought out legislation. And just to unpack it a little bit, I testified in June with the city at the City Council, spoke to them. We were expecting a collaboration, a discussion to create something that made sense. And instead of that, you know, a few weeks ago, we get this legislation and we're just stuck with it without a discussion. And so the one other thing I will say, I don't want to jeopardize this, is that the sponsor of the bill, Ose, what he was quoted as saying yesterday is that this is the reason why the Dems lost the election last week, is because, you know, Mayor Adams has been critical of this as well, is because we're not supporting pocketbook issues like this. He needs to take a look in the mirror, because the reason the Dems lost is because they're stuck on identity politics and messaging and supporting the left versus common sense legislation, things that help the city. And so I think that that's like blaming Haagen-Dazs for getting fat. He needs to really take a look in the mirror when saying.
It sounds like there's a lot of emotion
Sorry.
here. No. It sounds like there's a lot of emotion here. And like on the surface, to people who rent in this city, it would sound very appealing. But at the end of the day, it would get passed along. But it sounded as though you thought that there are ways that collaboration could happen where brokers and real estate agents wouldn't be blindsided. What would the solution have been?
I mean, I think we have a discussion. You don't make a hard and fast rule that says if you advertise a listing then it has to be paid by the landlord. Have discussions about what would make sense. Maybe create something that would be working together versus these sort of things that they think are going to fix this, which won't fix the market at all. I think it's just short-sighted. And look, you know, I always say good politics requires compromise, right? Don't we all have to come together and work together, especially based on what happened last week? We all have to work together. And I think the city council should want to work with the industry, with real estate professionals, with everyone. They do not have a monopoly on caring about their communities. We care about our communities too. Let's work together. That's what I would say to them.
So the vote is today. It's all but expected to be passed. And if it does go through, the average fee, to my understanding, is anywhere between 5 to 12%. Let's call it 7%. The average rent in New York on a one-bedroom and a doorman is like $4,200, $4,300. Does this mean that a year from now, the average rent in New York could be closer to $5,000, which just seems, in this affordability time, seems crazy?
Potentially that could be what happens. It's going to take some time, but it could have that impact. And I think that's what Mayor Adams was talking about yesterday, that the city council probably has good intentions, but he thinks that the unintended consequences of this are going to end up hurting the people that they're trying to protect. And I think we have to get away from selling our narratives and identity politics and focus on solving challenges, making the cities safe, you know, doing those sorts of things versus, you know, selling this position.
You know, this is an emotional issue, I think, on all sides, because to your point, $4,200 for a one-bedroom apartment. I mean, at the end of the day, if not $5,000, if not the Fair Act, then what? What is the problem, and how do you diagnose that problem?
I mean, I think this is what we have to do, is work with people who are helping to build affordable housing, which very much the city needs. I'm involved with an organization called The Bridge, which we build affordable housing for people who are on the streets, who suffer from mental illness, who have drug addiction. They need to work collaboratively, with organizations like that. There's plenty of that to go around, and people who want to roll up their sleeves and work together. But just sort of like creating this legislation that's damaging does not help our city.
What's the fallout going to be to brokers and agents? Because there's so many brokers out there focused on rentals, and if all of a sudden there's not an easy payday because maybe people are going to be reluctant to pay those fees, or, you know, it's going to be a different situation, do you think that there's going to be fewer brokers, and do you think that the government will in some way compensate them, help them?
I mean, I do think this will have a negative impact on real estate professionals who do rentals, and there's a lot of them in New York City in particular. And, you know, look, a lot of real estate professionals that I know are single moms who are feeding their families. And so it will really hurt them greatly. It's a hustle. It's a lot of work. Remember, in the real estate business, you only get paid for results. So I think it could be greatly damaging, but we plan to fight this. I mean, Rebney has been a great supporter of ours. We're working together with them. We're not going to just sit by idly and let this sort of irresponsible legislation pass. You know, OC has been quoted as saying that agents shouldn't collect a fee for just turning a key and opening a door. And he says he didn't say that, but we have it on tape as him saying that. I think he's impeached himself and hurt himself with credibility. And I think instead of that, we need to work together and have discussions.
Bess, we got to leave it there.
Okay.
Certainly the next mayoral race is going to get interesting. Bess Freedman, CEO of Brown Harris Stevens and Bloomberg's Abigail Doolittle. I want to bring you back to that breaking news here, because of course we have some changes, big ones in the Senate. And of course we have Thune beating John Cornyn of Texas, Senator John Cornyn of Texas, by a vote of 29 to 24 to be the next Senate Republican leader. This is according to a number of sources familiar with the vote. Remember that there was also a lot of discussion here about Rick Scott. Of course, he did not also, he was passed over in this silent vote. South Dakota Senator John Thune will be that next Senate Republican leader. Now, coming up next, Bitcoin booming since the Trump election win, but it's not just Bitcoin. Pretty much everything connected to crypto has been soaring in that post-election rally. We're going to talk about it with the CEO of 21 Shares next in our weekly ETF report. This is Bloomberg. And it's time now for our weekly ETF report, where we're going to check in on the latest news tied to exchange-traded funds. And of course, last week's election signaling a possible seismic change for the crypto industry. And this week we are joined by co-founder and CEO of 21 Shares, Hany Rashwan. You know, Bloomberg Intelligence is Eric Balchunas. We were just talking about it, just record flows into Ethereum ETFs alone. Of course, we know Bitcoin ETFs have been the beloved ones and have really forced themselves into the way of the top flows and the top set of ETFs by assets in some regards as well. You look at IBIT. I actually want to go one step further. If you are sitting here and you are anticipating a large-scale regulatory change under President-elect Trump and a potential new SEC chair, how many more new ETFs tied to crypto do you start to put out?
We have 53 ETFs, I think, globally. Covers a lot more assets than just Bitcoin and Ethereum, and so I think the list is very long. For what we can possibly do with friendly crypto regulations. I think there's a story with Bitcoin that you've probably talked about over the last week. The story with Ethereum is a little bit different. I think there are a number of headwinds that Ethereum was facing. It launched in the summer, activity is depleted, there are a lot of macro issues, some of which, like inflation, seem to be going in a more appropriate place. Others, like macro disruptions and wars, going into a darker place. But maybe what is happening and the fall momentum and what we're seeing on a macroeconomic basis with potentially very friendly crypto regulations on the horizon is way more than enough to start a lot of interest in Ethereum.
Humor me a little bit here. What's been the conversation around Doge after the news last night about the Department of Government?
We have the ticker reserved in a number of places. We've considered doing it a number of times because client requests have come in, but it's never really been a serious asset that has passed regulatory scrutiny and things like that. I think we take very serious care of thinking about the roughly $10 billion or so in AUM that we have right now. We have a responsibility to be good stewards and give good, reliable access to this ecosystem. So I don't think we're going to list meme coins anytime soon, but it's good to see people excited.
Hany, I think we have to leave it there. We're up against a hard clock here. That is Hany Rashwan, the co-founder and CEO of 21 Shares. I also want to talk a little bit about the comments coming out of the Senate. You have John Thune commenting on X after winning that Senate GOP leadership vote. He is saying that the Republican team is united behind Trump's agenda. Remember, we had mentioned that Senator Thune had beat Senator Cornyn from 29 to 24 to be that next Senate Republican leader. You have the next government of the United States taking shape, and there is a live shot of where all the decisions, of course, are being made. We're going to bring you some more of that later in the hour. Now, coming up, bond markets pricing in all that news from Washington. We are covering both with live coverage in D.C. and the latest perspective next from Robert Tipp at PGIM Fixed Income. This is Bloomberg. This is Bloomberg Markets, and I'm Sonali Basak. Let's get a check on these markets. You have the S&P 500 having gained some steam today, up almost 0.3% now. The NASDAQ 100 still roughly flat. That bid in the bond market, though, has been waning. Earlier, you saw the 2-year yield closer to 6 basis points lower. Now, just over 5 basis points, now at 4.28. You have the 10-year essentially now flat on the day. You're looking at 443. And of course, we've had a lot of news coming out of the Senate. We will bring you that in a moment. But before we get there, let's bring you some of those midday movers on the equity side. Bloomberg's Abigail Doolittle is back with us.
Well, we do have some outsized movers on the day, Sonali, although Kava had been up more than 20% or around 20% earlier, now up 6.3%. Still a healthy gain, but definitely off of the highs. Maybe investors rethinking the big beat that they put up. In fact, they beat on all metrics, and the forecast for the current quarter was very strong. JP Morgan was pointing out the fact that any way you slice and dice this company, Valuation is high, so maybe that is what some investors have on their mind. I will say JP Morgan, a neutral rating, but long-term, like the prospects of the company, it's just that valuation. But again, a good quarter and outlook, the stock higher on that. If we flip up the boards and we take a look at Rocket Labs now, here is a very significant gain, clearly up 40.4%. They put up a good quarter, plus more launches than anticipated. The view good, and investors clearly rewarding the shares of Rocket Lab, up more than 40%. And then finally, to the downside in a big way, down 57% at this point. We do have the shares of Spirit Airlines down sharply, down again 57% after into today since the peak, basically being down more than 95% on the bankruptcy announcement. The potential deal with Frontier didn't go through, and now it is a matter of bankruptcy. Sonali.
Abigail, thank you so very much for looking under the hood for us. We're going to now go back to Washington, where Bloomberg Balance of Power co-anchor Kayleigh Lyons joins us live from the White House North Lawn, where there has been a lot going on with the president-elect himself. But let's go back to the big news of the hour, which is, of course, the Senate Republicans really lifting up Senator John Thune here to be the next Republican Senate majority leader. What else do we know right now?
Well, we've heard from Senator Thune himself essentially saying that he's honored to serve in this role. He will be the one that succeeds Mitch McConnell and becomes the Senate Majority Leader of the incoming Senate that will sit in January. And he did so defeating two others who were up for the job, Senator John Cornyn of Texas and also Senator Rick Scott of Florida, who was the favorite of many who were close to Donald Trump. The MAGA right, if you will, had been advocating very heavily for his candidacy, but he was taken out in the first secret ballot. That is secret potentially pivotally in this ultimate leadership outcome, Sonali, because members are not necessarily going to be held accountable for the person that they voted for. It's not public record who they cast their ballot for, and that may give a little bit more cover to those who chose to go against the wishes of many close to Donald Trump and not vote for Senator Scott, but instead to elevate Thune as well. And I would just point out, the president-elect himself is still in this meeting in the Oval Office with Joe Biden, as well as the chief of staff, Jeff Zients, to Joe Biden, and his incoming chief of staff, the one Trump has designated will be Susie Wiles, all still in that meeting. And it's not clear at this time whether or not the news of Thune's victory, appointment or election as majority leader has yet reached the ears of the president-elect. We're still waiting to see when he emerges from this meeting.
I also want to bring some more headlines as we discuss what's going on here. Senator Tim Scott elected as Senate Republican campaign chair. And Senator James Lankford elected the next Senate GOP policy vice chair. We also had earlier cited the conversation that Senator Thune has been having on X as well, this idea that the Republican team is united behind the Trump agenda.
Yep.
How united?
Well, right now they're looking pretty united, Sonali, especially considering they're coming off victories of not just his election to the White House, but also becoming the Senate majority rather than minority and having the House along with them. It seems a Republican sweep of Washington. So it will make unification around Trump's agenda more likely, that they will be able to actually pass these policy objectives. As you point out, Senator Tim Scott being elected to head up the NRSC is going to be charged with getting more Republicans elected to the Senate. He also is expected to serve as the chairman of the Senate Banking Committee now that Sherrod Brown has been, of course, dispensed in his own electoral race, and because the Democrats will be the minority here. So certainly we're looking for more news as to what exactly they would like to tackle first. Donald Trump also met today with House Republicans before coming here to the White House and told them effectively, cheered on the fact that they will maintain the majority. And he, according to reports, encouraged them to support the current Speaker, Mike Johnson, because House leaders are also holding leadership elections today. And those in leadership will be critical in trying to get over the finish line everything it is that Donald Trump wants to get done.
Absolutely. There's also another set of situations going on when it comes to President Joe Biden. And of course, we know now that he's going to meet China's Xi Jinping in Peru on Saturday on the sidelines of the Asia-Pacific Economic Cooperation meetings. A lot of world leaders there. What do we know about the message in the middle of the transition of power here in the United States that will be projected to President Biden's Chinese counterpart?
Well, Sonali, this will be the third meeting between Biden and Xi during the course of this administration. And repeatedly, they have emphasized the fact that they are meeting at all, much like the meeting that has taken place today between Biden and Trump, is the important part, that they are maintaining a dialogue and having communication with each other. But yes, you're exactly right. It's going to be different in nature, as it will be happening knowing that Joe Biden only has 2 months left of his presidency, and that Donald Trump will be coming in, and that could very much change the nature of the U.S.-China relationship. So President Biden may want to underscore that the lines of communication should stay open, even as this transition of power happens and a new administration takes over. And we do expect, although it has not been outlined by the White House what is happening behind closed doors in the Oval Office right now, that foreign policy could be featuring heavily into the discussion that Trump and Biden are now having, and China could very well be a part of that, Sonali.
The U.S. is watching, and certainly the world is watching as well. Thank you, Bloomberg of Balance co-anchor Kaylee Lyons. We thank you so much. Stay warm out there outside of the White House. Now back to the markets and the economy. Apollo Asset Management co-president Scott Kleinman spoke to Bloomberg yesterday ahead of the latest CPI report, but he sees persistent price pressures. Take a listen.
I think rates are going to be higher for longer because inflation is not tamed. The Fed can say what it wants. You just have to open your eyes and look around. We see inflation not as beaten, but as suppressed. And the more the Fed cuts, the more you're lifting your hand off that lever to hold inflation down. And look, nobody's got a crystal ball, but we live in a world that is inherent. The mega trends that are driving the world today are pretty inflationary.
And for more on the new U.S. economic data, markets are still processing, of course, and we're going to bring in the head of global bonds and chief investment strategist at PGIM Fixed Income, Robert Tipp. Something that fascinated me today, Robert, was the move in the 10-year, because you did see a dip lower. You did see a steepening of the yield curve for a moment there. The 10-year is flat now. Why is that?
Yeah, the markets are anxious. We don't know anything about forward-looking policy, and the underlying economic data has been very noisy. In the meantime, policy is in motion on its way from high rates on the way down, but there's always the possibility for that to change. The markets are extremely anxious, and we're seeing a lot of jerky movements in the market as they try to sort through. I think initially the fact that the numbers came in more or less as expected at first, it took a fear factor out of the market, and there was a rally, particularly in the front end of the curve. But as investors, began to mull over what we know and what we don't know, and some of the underlying trends, you saw the anxiety settle in, and the market begin to sell off, particularly at the back end of the curve. So I think that's what's going on here, as investors try to get the big picture, in focus.
There are so many concerns about sticky elements of inflation under the surface. To the extent you're still concerned about it at all, where are you most concerned? What will keep prices higher?
Right. So prices are important, and your underlying service inflation, the deceleration may have stopped above target, but there's been so much variability in the numbers quarter to quarter, you can't be sure of that. And more or less, you're pretty close to target. And the reason why it's not worth splitting hairs about is the fact that the unemployment rate has been going up. From a low of around 3.4 last year, we were up the better part of 1% until a couple months ago. Job growth has slowed down. And even though people have been getting new jobs, it hasn't been fast enough to fully keep up with the growth in the labor supply. And so the unemployment rate has been going up. So I think central bankers around the world are pretty optimistic that moderate growth, growing workforces, moderation in wages, that inflation will come down that last mile. But the fact that the jobs market is soft is critical for the Fed. The notion that they think they are restrictive, critical, and keeping them on path to continue dropping rates, at least for the near term.
For the people who are concerned about inflation, particularly inflation on the heels of a tariff policy, there is this other argument that productivity could fill some of that gap. What do you buy about that argument?
Yeah, that's absolutely possible. It's also possible you could get more rapid growth from productivity enhancing tools like AI, if that's what the driver is, and those can create more demand than can easily be satisfied especially if you're in a contentious trade environment. So there are a lot of moving parts here. I think big picture, though, we are in a world that seems to be more biased towards excess capacity. I mean, when you look at the excess capacity in China, when you look at the sluggish growth across Europe, there are not a lot of places that are overheating from excess demand. So I think the notion that there are a lot of moving parts, but those underlying trends are moderating, and therefore the overall path, exactly when the Fed is going to be cutting rates, by how much, whether they get interrupted briefly, is less important than where they're going to be, say, 2 to 5 years down the road.
When you look at all of the headlines coming out of Washington, on one hand, there is a generally clear story when you think about the way that the president-elect has talked about tariff policy. And then you see, for example, the Republican leader in the Senate having traditionally been more of a free trade advocate. How do you digest that? Do you take into account what has been happening and the history of what has been said? Or do you wait for the policies to just come out before you make a decision on how you're going to express a view in the market?
Sure. I think in terms of the long-term outlook, as I mentioned, I think we're at a good spot, but you have to look at the near term and the potential variations here and run the scenarios. And if you do get an extreme tariff scenario, there are a lot of countervailing forces there. So on the face of it, sure, prices are going to go up, but to the extent that that saps real income, it hurts people's purchasing power, that could dampen growth. The other thing to keep in mind is that an increase in tariffs, especially if they're gigantic increases, it is going to be a one-time factor. So, once you get 6 months, 12 months down the road, that's going to fade. And so I think there's going to be a lot of motivation for people, including central bankers, to look through and sort out those effects. So, yeah, you need to think about the corner scenarios and what can happen. But what we're seeing in the Senate here is also indicative of the kind of balance and frictions that are inherent in the U.S. government. The balance, if you will, it's hard to do things in a precipitous fashion. So I think there's a lot of reason to, yes, think about the extremes, but also think about more moderate scenarios and what is the ultimate outcome that the president is likely to be shooting for, which is more fair trade, which ultimately would be a positive. So, a lot of different ways this can go.
Robert, we thank you so much for your time and helping us digest it all. That is the head of global bonds and chief investment strategist at PGIM Fixed Income, Robert Tipp. And a reminder, South Dakota Senator John Thune, a longtime deputy of Mitch McConnell and an advocate of free trade, has won the election to lead the Republican Senate majority next year. And it could set up potential conflicts with President-elect Donald Trump over tariffs and Ukraine aid. At the very least, he has been voicing that they are behind Trump's agenda. The Republican team is united, according to Thune in a comment on X. We're going to keep an eye on the markets and D.C. this hour. We're going to bring you more where that came from next. This is Bloomberg. This is Bloomberg Markets, and I'm Sonali Basak. It's time now for the stock of the hour. We're looking at none other than Tesla. Shares are rising since Donald Trump has won the presidential election. And last night, the Trump transition team announced Tesla CEO Elon Musk will co-lead a new Department of Government Efficiency. For short, that is DOGE. For more on this, we are joined by Bloomberg's Max Chafkin, who hosts our Elon Inc. podcast. I thought it was interesting to see Tesla rising this morning because wouldn't DOGE just mean he's more distracted?
Well, yeah, but Tesla investors have made the calculation that Donald Trump is going to be some kind of game changer for the company. You look at that stock chart, how much it went up after the election. They clearly think that Trump is somehow going to take this robotaxi project, which Musk is essentially betting the company on, from a basically hypothetical, maybe they had a demo earlier this year, to something real. And I think there are reasons to doubt that, but that is the calculation that's being made at the moment.
Is that really the calculation, or is the calculation just that Elon Musk is close to the White House, let's bet on it anyways? It's like a proxy in the equity market to bet on Elon.
There's a meme stock quality to this whole thing, and I think you're right. It's part of it's just vibes. Like Trump won, that's good for Elon. But when you look at what analysts are actually saying, if they're trying to come up with a justification for this stock, which is kind of hard, it's kind of hard to explain what changed really in the last week.
You know, even beyond Tesla, how much does Elon Musk have in terms of teeth with this new kind of post that he's being put in at the government?
So important to say one thing, which is that this is not a job. He is not going to be Senate confirmed. He's going to be outside the government. He is an advisor. That said, he could be a really important advisor, could be, say, the last person that Donald Trump is going to on many issues, and he has lots to gain. Elon Musk, first and foremost, besides Tesla, is a defense contractor. And there are all sorts of ways that a new Trump administration could mean dollars for his companies, in particular SpaceX, which is his rocket company. And then the rest of the empire is heavily regulated. So lots of ways that Trump could help by either giving money directly to Elon Musk or his companies, or slowing down competitors or making things easier on Elon himself.
Nothing to say of cutting money from the government debt. Anyways, Matt Chafkin, Bloomberg News reporter and co-host of Elon Inc., the podcast. Make sure you catch that wherever you listen to your podcast. Of course, could talk about SpaceX all day. Now, coming up, we're going to look at how fund managers plan to navigate all those changes down in D.C. with the interest rate environment changing, the markets are changing. We'll bring you more on that next. This is Bloomberg. And joining us now for a macro look at the current environment, we're going to talk to Arjun Raghavan. He's the CEO at OCIO Partners Capital, a firm that oversees over $60 billion of client assets globally. This OCIO business has become really popular in recent years because people want to hand you the keys and make a lot of decisions in a very complicated environment. And, you still have interest rates higher for longer. You have markets maybe whipsawing a bit, but still near record highs. When your investors are making decisions between public and private, why go private, I suppose, because you do still have such an increase in asset valuations in public markets?
Yeah, a really good question. And I'd probably point to two key reasons. The first one I talk about is just access, right? So if you think about what's happened, just take the US as an example. I think the stat is in 1996, you had 8,000 listed companies in the US. And today, that number is 4,500, right? So if you want access to sort of interesting companies, of course, you can go to public markets, but you get access to a range of different companies on the private sphere as well, right? So number one is almost just access. The other key stat I'd like to mention is the fact that, particularly in certain parts of the private market, so let's take the lower mid-market, right? Smaller companies under $500 million of enterprise value. The statistics show that in the private sphere, earnings growth tends to be 3 to 4% higher in the underlying companies owned by private equity firms rather than in the public sphere, right? So you actually potentially get a return premium by investing in private markets, and you don't have to make heroic assumptions in terms of leverage and multiple going up, et cetera, but the underlying operating earnings tend to be better.
I'm glad you brought up those kind of small and medium-sized companies, because there's a lot of conversation about the idea that now that there's more certainty in the markets in the United States around politics, even around interest rates to some degree, that the IPO market would open back up. But would that be true for everybody? Because the set of companies you're talking about seem to stay private for longer anyways.
Correct. Yes, absolutely. So I think for the bigger private equity firms, I think it's critically important that the IPO market opens, right? So we're talking about large cap companies, et cetera, because that's the main exit mechanism. Of course, you could sort of pass the parcel and give it to other private equity firms, et cetera, but it tends to happen less in that part of the market. In the lower mid-market, I don't think the IPO market matters hugely. What really matters there is sort of other capital being available through other private sources, right? So that you can crystallize.
Say that the IPO market does not open as widely as expected. Yeah. What does it mean in terms of new capital that investors are willing to give to private equity and even private credit firms for that matter, when they have had so much of their capital tied up in illiquid markets anyways?
Really good question, and I think it becomes very tricky, right? Because you have to show exits, you have to distribute cash back to investors. Otherwise, you're not going to have capital flowing in, right? Because people end up being over-allocated, et cetera, and there's not enough evidence of return. So I think it's a very difficult environment if the IPO market doesn't open up for the large cap private equity.
About 30 seconds here. Are the markets opening back up? Do people still feel a little stuck in their illiquid holdings?
I think it's starting to, I think we can see the green shoots. I think the US election tends to be a little bit of a, until there was more clarity in what was going to happen in terms of policy, I think things have been held back. But I'd say now, with there being more clarity, I think the markets are going to open up again.
Arjun Raghavan, they're a CIO at Partners Capital, who of course manages funds, helps clients through public and private markets here. And want to look at the markets here because of course, as Arjun was talking about just a moment ago, there is more certainty. There's more certainty at the White House. There's more certainty in the Senate now as well. And the market's reacting positively. The NASDAQ 100 now positive, up almost 0.2%. And I'm Sonali Basak. That does it for Bloomberg Markets today. Stick with us through the close. This is Bloomberg.